All right, folks, what's up? Hope you all had a good weekend, guys. Time to get back to work here and start our preparation for the week ahead. So, had a pretty good weekend. Did a little bit of relaxing, did a whole bunch of work. I think I did 5 or 6 one-on-one lessons this week, guys, on Zoom with the guys and girls in the 20-week swing course, which you guys can check out in the description of the video here. And I love it, man. It's always so cool, guys, to talk to different traders. Everybody's kind of at a different stage of, the quote-unquote journey. It's awesome to be able to play a role and, hopefully, guys, help a handful of y'all avoid a lot of the costly and painful mistakes I had to learn the hard way. That's the mission, at least. So, jumping into this week's prep, guys, as always, we got to check the economic calendar here. Make sure that we don't got any Fed sneaking our way. So, we take a look here this week. And I'm not seeing any Federal Reserve. Good jobless claims on Thursday. But there we go, guys. Looking like we don't got any Jerome Powell. Nothing like that to worry about. So that's always a good thing. Now, as far as the market, guys, right? Briefly, I'll cover my focus list at first. As you guys know, I'm focusing on my business and nothing else. My business as a full-time trader is trading squeezes and pullbacks to the 21 EMA. So a couple of squeezes here, guys, a couple of names pulling on back to the 21. That's it. I don't care what other stocks are doing. This is my business. The only damn thing I'm going to focus on this week. So before we kind of jump into, a breakdown of the market, guys, why don't I just go ahead here and let's clean this chart up a little bit. And just going to kind of go through a couple of these squeezes real quick. And, guys, I'm not going to go through a full breakdown on the squeeze or how to trade it. We've got a whole bunch of those videos here on the channel. So for those of y'all familiar with the squeeze, let's get jumping in here. For the daily squeezes, guys, you got your Amazon here. Now for me, not near my ideal entry point. I would much prefer an entry down near the 21 EMA to play the daily squeeze. So I do have Amazon on the daily squeeze watch list, but I also got it on the pullback to the 21 watch list. So not a bad looking daily squeeze, but not one for me, guys, right now that warrants an entry. But if we can pull back to the 21, that's a whole different story. So we've got Amazon, guys. We have Visa. What I like about Visa here is not only do we got a pretty handsome daily squeeze, we got a gap to fill over here. And I also like the fact, guys, that MasterCard over here, right? Kind of Visa's, twin sister, also was in a daily squeeze and is fired beautifully to the upside. So who knows? Maybe old Visa here, guys, getting ready to do the same thing. I wouldn't mind grabbing me a put credit spread down there towards 185-ish. So keeping a close look, guys, on Visa. A couple more here. We got Tesla. Guys, Tesla's doing nothing right now, right? You keep trying to force the issue. It's just stuck in a daily squeeze. But I love the setup here, hanging out at the 21 EMA. We'll see how things go this week, guys. If the overall market begins to come back a little bit, pretty damn good chance Tesla comes in a little bit as well. But nonetheless, I don't feel any need to rush into the setup. It's a daily squeeze on Tesla. Y'all know what that could deliver if and when it does fire, so we can be patient. Hanging out right there at the 21 EMA, I like it. Definitely high here, guys, on the focus list. And then we have got Zoom. Beautiful daily squeeze. More importantly to me, guys, it's chilling at the 21 EMA, and I like where we're squeezing here, right? Got a big daily squeeze. We're building up all this energy, but we're doing so right underneath the recent all-time highs. That energy gets released and can break through resistance here. You got nothing to stop it. So I like Zoom there, guys, kind of a quote-unquote virus stock. We'll see how the market goes this week, and we'll see how Zoom goes. And then last but not least, guys, as y'all know, kind of the general theme of the videos here lately have kind of been centered around the fact, guys, that, man, these semi-names and these tech names are running the market, right? You look at XLK, the tech sector, and then over here, guys, at SMH, the semiconductor sector. While they're both a bit extended right now, they've led the market on this entire rally off the bottom. So anytime we can find a squeeze in a semiconductor stock, I think it's worth keeping an eye on. Got a nice gap to fill here as well, guys. Not a bad looking setup, right? There's definitely, stronger semi names, but not a bad one. So that's it, guys, for the daily squeezes. There's really not much cracking on any other different time frames. So that's about it. And then, guys, I love those pullbacks of the 21. Let me show you a couple of names I'm waiting for a pullback to the 21 on right now. Right? One being NVIDIA, which to me, guys, it's just extended. That does not mean it can't continue to run there. It just means, my given trading style, my preferred entries, this shit is extended, right? Same thing can be said here, guys, about Apple. Apple can keep going, but goddamn, right? We're, a good mile and a half here above the 21. I'm not looking for a swing entry here. Same thought process, guys, on Facebook and AMD. Hence why I'm looking at names like Tesla, chilling out at the 21, right? Why I'm looking at names like Amazon, a little bit closer, right? Maybe coming into the 21. Names like Zoom. The stock, guys, as a general statement, is doing, one of three things. It's moving away from the 21 EMA. It's making the reversion back to the 21, or we're chilling out at the moving average, getting ready for the next move away from it. So I can look at Tesla and say, all right, here's an example of a stock getting ready to make its next move. Whether it's away from the 21 to the upside or the downside, stay tuned, time will tell. But then I can look at something like Apple, guys, and say, all right, this is a stock that is already well into its move away from the 21. We know, guys, these things can keep on ripping here, right? But at the same time, I'm not trying to swing this thing when I really missed my ideal entry a couple of weeks ago. It's just too far gone, right? I'm not trying to short puts on this thing, and then you get the reversion to the mean, and that wipes you out. So, guys, whenever I'm talking about, my ideal entry, and I'm talking about the 21 EMA, that's kind of my general thought process. We're doing one of three things. We're moving away from it, we're coming back to it, or we're just sitting there collecting dust, getting ready for the next move away. So, with all that being said, guys, as we know, it's the tech names and the semi stocks here that have been leading the way for the market, right? And to continue the whole discussion here of the 21 EMA, we're due for a bit of a retracement here, guys. I ain't saying it's going to happen. I'm not saying I'm bearish. I'm just talking about what we should potentially expect here. And what we should expect, guys, is that the market will run away from the 21 and then come on back home and just over and over and over and over and over again. So I'm not saying we're not going to continue to pump higher here. What I'm saying, and I know y'all in the Focus Trades group, you're sick of hearing me pound this into your head every morning, but we can't be surprised, guys, if things begin to come in a little bit. You look at the Qs here, well above the 21. You come over here and we look at Big Mama the SPY. And same thing here, guys, right? You just can't be surprised if we get that reversion to the mean sometime soon. I want y'all to keep that in mind, right? So what the market does, we run away and we come back home. We run away, yeah, we can keep on running, but typically, guys, at some point we're coming back home. So with that being said, here's an interesting observation, guys, from Friday's session, right? Now, for those of y'all looking for the market to continue to show signs of strength this coming week and continue to move forward, just like this entire rally here, guys, we're probably going to be pretty reliant on strength in tech names and semi names to push the market forward this week. Here's an interesting observation we're making here in the group, guys, from Friday's session, is that we look at our leaders. Right, here's a tech sector, definitely a bit extended, but they did a little bit of profit taking, guys, on Friday in the tech names. Now, you can't blame them, right? You look at something, guys, and ask yourself, what would I do if I already had a position? Well, if I'm getting long Apple right around here, right, where you should be getting long, and you catch this fat of a move, right, I ain't thinking about doubling down, put it that way, probably thinking about taking some chips off the table. And we saw a little bit that, guys, on Friday, right? Apple here coming in a bit. You had Amazon coming in a bit as well. Google, Microsoft, Facebook, you name it. But here's what, I think is a little bit of a better observation to go along with that, is they're taking the money out of tech, guys, and it does look like potentially they're rotating it into a couple of different sectors. So while tech names were getting sold off a bit on Friday, check this out. We've come on over here, guys, to XLF, which is the financial sector, and you can see finances getting some love there last Friday, right? You got the index itself, guys, getting ready to fire a potential daily squeeze, and then you look at a couple of those those finance names from Friday, right? JP Morgan had a pretty good day, right? Take a look here at Goldman Sachs, guys. Nice day there on Friday, right? Morgan Stanley. Nice day on Friday. The list goes on, but nonetheless, guys, pay attention to this over the next few days, right? Here's kind of my thoughts on the market, right? We got our two indexes, right? You got the S&P 500, and then you got the Qs here. Now, for our market to continue to move forward, guys, tech and semis have played such a big role, right? Especially for the Qs, which is just basically tech. So for the market itself to continue to move forward here in the short term, we would ideally, guys, like to see money keep pouring into those leading names, being tech and semis. Because if you look at the chart of the S&P 500, and then we go look at the charts, guys, of all the individual sectors, it's very obvious what's led this rally. Here's the chart of technology. Here's the chart of the semiconductors. And now here's a chart, guys, of finance. Basically where it was back in March. A whole bunch of noise, but gone nowhere. Right? You can look at energy, and it's the same thing here, guys. So pay attention to this tomorrow. See if we continue to see signs of weakness in tech names, and that capital rotating into other sectors like finance, energy, transportation, things of that nature. In my opinion, guys, it's going to be difficult for our market to continue this climb forward if it's got to do so on the backs of financial stocks and transportation stocks like UPS. Those are just my thoughts. So I guess what I'm trying to say, guys, in plain English is that if we begin to see signs of capital rotating out of technology and into other sectors, that could certainly begin to bring the market in a bit here. So I think right now, given the fact that, again, I'm not saying we can't keep pumping, guys, but given the fact that we are definitely a little bit extended here, I think it's a good time, guys, to pay attention to those leading names. If they continue to take money out of tech right now, probably, or at least in my opinion, regardless of where that capital is going, it's definitely going to have an impact on the overall market. So you look at the market, guys, like a basketball team, our strongest players have been the tech stocks. If they begin to suffer in performance, right, maybe the rest of the players on the team just aren't enough to keep moving us forward. And that's how I'm looking at the market right now. So much or all of this rally was on the backs of strength in tech and semis. So as we're a bit extended here, guys, playing at new highs, potentially due for a nice healthy pullback, that's definitely something to pay attention to. If money keeps plowing into tech and semis, we can continue to pump here. If they begin to rotate out, I think it gives us potentially a little bit of a better probability of seeing things come in a little bit. So with all that being said, guys, no biases at all. We got to play what the market gives us. But I think these are some things that definitely take into consideration. So that's about it, fam. It's about 10 o'clock here on my time, getting ready to go to bed here, excited for the week ahead. So I love y'all. I appreciate you for watching. If you haven't already, go ahead and subscribe. Check me out on Instagram at Focus Trades, and you can check us out, guys, at focustrades.com. And we got the 20-week course. Registration ends on September 1st. That's about that. So I'll talk to you soon, family. Peace out.